Forex brokers offer two prices for a currency pair: the bid price and the ask price. The bid price represents the amount at which you can sell the base currency. Conversely, the ask price is the amount at which you can buy the base currency. The disparity between these two prices is referred to as the spread, which is also known as the bid-ask spread. Brokers who operate on a no-commission basis rely on the spread to generate their profits. Essentially, the spread serves as the fee for facilitating immediate transactions. This is why the terms transaction cost and bid-ask spread are used interchangeably. Rather than charging a separate fee for each trade, the cost is incorporated into the buying and selling prices of the currency pair you wish to trade. From a business perspective, this approach is logical. The broker offers a service and needs to generate revenue in some way. They earn money by selling the currency to you at a higher price than their purchase cost. Likewise, they profit by buying the currency from you at a lower price than the amount they will receive when they sell it. This disparity in prices is known as the spread.